Get started. Hi, everybody, this is Ryan Carroll. He's with Change Wholesale. It is that
yes, Change
okay.
Wholesale. If I know that you guys just got up and running in January, but we underwent a brand name change. It was like in mid-March. So we used to be called Commerce Home Mortgage. So if you see Commerce Home Mortgage, or if you've heard of it, same company, right? And really excited to talk to you guys, just because there's a few things that we're doing specifically on the non-QM side that really nobody out there is doing. And before I go just into details on it, there's specific parameters and delegations that we have that allow us to do these loans. So specifically, I wanted to talk to you guys about what we're doing with our golden child, which is called our community mortgage program. So, right, you find your borrowers that specifically in Southern California, you have a lot of folks that are writing off a lot of income on their taxes, not qualifying for your standard jumbo, conventional loans. We have a program over here that is a no income, no employment program for primary and second homes. So normally those borrowers that are not qualifying due to DTI, due to whatever reason, just falling out, this is really meeting a need within that marketplace for a lot of folks that are just writing off a lot of income on taxes. Does that make sense as a whole?
It does, and we have a fair amount of those.
Yep.
People here, and I know in my city we have a lot of self-employed and things like that. So some of them can really be a challenge.
Exactly. And we find that there's a pretty large market of it in Southern California, some parts of Texas, and South Florida. So that's where we see just a huge influx in need for this type of product. So let me share my screen with you guys for a little bit here and just show you what I'm talking about. Here we go. So I sent this email out to you, Travis. But here's just a quick highlight on what we're doing, right? And the detail that I wanted to go into, the reason that we're able to do this type of program is because we have something that's called a CDFI delegation. What that stands for, it's a Community Development Financial Institution. In short, by having that delegation, it allows us to do ATR exempt loans, which this is. So, if anybody asks or push back on you, how are you able to do this type of program? Is this 2006? No, this is responsible underwriting. We're doing it responsibly and qualifying borrowers with a couple of things. One, you can see the matrix right here. You're going to have a little bit of skin in the game here from LTV perspective, right? You need 20% down, which we actually just increased from 25%. So 80% LTV on purchase and rate and term, and 75% for cash out. Minimum FICO will be 640, and there's no restrictions on LTV when you go FICO that low. You just need additional months in asset reserves. So there's three things that you're looking at for this program, whether your borrower qualifies. It's FICO, LTV, and then reserves here. Make sense?
Yep.
And the great thing too is there are a lot of cash out opportunities when you're talking to borrowers. And with cash out can be used as the reserves, right? So literally the only thing that we were requiring with asset reserves, which we do VODs against those accounts, we're not doing any of that. So those are pretty easy loans to do once they come out of underwriting. Okay. So that's really our golden child. It goes up to 3 million loan amount. Rates will range anywhere between 4% and 6%. If you ever wanted to price out a loan, we do have a quick pricer on our website, which I can show you right here. Let me pull it up. If it wants to work, let's see. Oops. Give me 1 sec, guys. Sorry.
All right. And guys, they've already been added to the back office, so you can just link right over to their portal. And Ryan's information is there as well.
Yeah, for some reason it's not wanting to share my right screen here, but let me just pull up a new browser. I just want to show you because it is important. This is how you'll price out any given scenario. So let me just pull up a new, let's drag this over here. There we go. Can you see this, this new browser that I just plugged in here?
Yeah, that just came up.
Okay, perfect. Yep. So this is our website, changewholesale.com. And you can go in here. The program is called Community Mortgage, and you'll just go through price out of scenario. And just to give you an idea of what we'd be looking at, say we have a 705 FICO, right? Loan amount 1 million, 80% LTV on a purchase, California, Los Angeles County. All of these will be borrower paid, right? So here we go. Yeah, you'd be looking at 5.475% at 20 with 24% down on this, and it does give you the option just on a pricing grid, but it's just as simple as that with price not alone.
Okay.
So that's, go ahead. I'm sorry.
Just to remind everybody that this is the bank statement loan we're looking at. So that's.
So
right.
This isn't a bank statement loan. It's actually a no income, no employment. So we're not generating any DTI. I'll get to the bank statement program that we do have in a second, but this is literally a no income, no employment. You leave both of those sections completely blank on the 1003.
Okay.
Okay. And then the next two programs that I want to talk to you about that we do a ton of business in is our DSCR program. Travis, are you familiar, or your team familiar with just how DSCR programs work?
Some maybe, some may not. So it'd be good if you kind of went over that as well.
Sure. Yeah. So a DSCR program it stands for debt service coverage ratio. What this is, it's for investment properties, right? And you use either a 1007 rent schedule that's generated from the appraiser, or a lease agreement in place against the PITI payment to qualify, right? So if my PITI payment, just for easy math, is $1,000, and the appraiser, they're doing the appraisal and they generate that rent schedule and it comes back as $1,200, that's obviously a greater than 1-to-1 ratio. So that's what you're looking at from what DSCR means. Now, even if that DSCR ratio came back as low, right, you'll still have options and you'd still be able to qualify with our program, which makes it so unique. So there is a no ratio option, and then there's a DSCR ratio option. Okay. And the cool thing about these things is it goes up to 85% LTV, which investor programs generally cap out at like 75 or 80. Cash out can still be used as reserves, and essentially the same thing. No income, no employment. We're just qualifying off the reserves that are needed, and then also just your LTV and credit.
All right.
Okay. And you could close in an LLC for these. Cash out is going to be used for reserves again. Anything less than 60% LTV, you only need 3 months. So just these are some of my just note the high level notations on the program. Up to $2.5 million for these.
Okay.
Okay. And to keep in mind when you're looking at this, it's for investors, right? People who are buying investment properties. You tend to get a 5-pack or a 10-pack with these types of investors if you ever do get this type of borrower.
Okay. And then how many times can they use that, the borrower?
What's that?
How many times can they use that as a borrower?
Good question.
That program.
Yeah. So they can have up to 20 finance properties, and they can use this program up to 10 times with us. So,
wow. All right.
Yeah. Okay. And then the next program that I'm really getting out into the marketplace as well, just because we used to be not as aggressively priced on this, and now we are in the ballpark here. It's our bank statement program, standard bank statement program, 12-month bank statement. The The unique thing about this bank statement program, though, is we are only using the first page of the bank statement. So in processing it, instead of getting all 16 pages, uploading it, doing all of that, we just want the first page. And we're calculating just the total deposits and withdrawals from that first page of the bank statement and generating a DTI from there.
Okay.
Okay. Goes up to 3.5 million. It is well priced. So I won't go through a full scenario or what have you on this, but it is well priced. It is for only primary and second homes. If you're qualifying for an investment property, it would be best to go DSCR on this. In business and personal bank statements are allowed. Business will use 50% of those deposits.
Okay.
Okay.
Yeah, this is the one that I liked. And even when you priced it, because I think we had priced at 90%, actually the rate was pretty good compared to some of the.
So actually, since you mentioned it, we'll go through here and just price something out. So, right. So this is Alt Doc is the bank statement program, right? Anything below 2 million will only need 6 months in reserves. If you're above 1 million, then that would be it. Or if you're above 2 million, excuse me, then you need 12 months. But yeah, let's just say we're doing 10% down here. You'll need above 720 credit if you're doing 10% down. So let's say 730 credit, purchase primary, less than 43 DTI. See what we're looking at. Yeah, so 4.3% on a 10% bank statement program. Pretty solid.
Yeah, that's what I thought. That was the pricing that I had received, and up against some of the others I was looking at, I mean, it was definitely the best rate for a 10%.
It's a solid program. It's and the unique thing of just using the first page just helps you out from a processing standpoint as well. So yeah, that's our bank statement program. If ever you need to get your rate sheets, this is just all on the website, turn times, quick pricer. I will tell you this right now, right? So we're one of 2 lenders offering that no income, no employment program. So we are pretty busy. That program is alone is the culprit for pushing these turn times up. On a refi, I need a full 60 days. For purchases, I'm going to need 45, just on the non-QM side. Right.
Okay.
For your agency stuff, I'm not your conventional guy. So you got a conventional lender that you guys like, continue using them. We're not really going to be an option on that front. But for your FHA, VA business, if you do run into that, we have some really aggressive pricing. We go down to a 550 FICO with approved eligible findings. We do no FICO IRRRLs and streamlines. So literally just no FICOs provided whatsoever. Even if they have a 500 FICO, as long as they're clean on their mortgage, for the last 12 months, they're good to go here.
All right.
But other than that, that's really just the high level overview of how we're going to be useful for you guys. So I'll just open the floor up. Any questions or any comments that you have?